G'day everybody, it's John Seville from Acorn Wealth Corp, and this is your executive summary. We are looking at a very interesting market at the moment. We had a triple bottom here on the S&P 500 today, coming down into this 38.2% Fibonacci at 1986 that we've been talking about for a while. So this is the third test of the support. Now, anyone who's followed our teachings will know that the rule of three dictates that after three touches, it's set to break. So the interesting thing will be which three touches happen first, because we've got also 2 touches on the top here at 2063. So it's a very pivotal time in the market as we're going into, of course, open range on Monday. So something is building, and Monday I think is going to be a critical day to dictate market direction. Talking to some of the traders out there, there's been a lot of urgency to sell in many of the big headline stocks. If you look at Microsoft, look at Yahoo, I mean, we've had some big breaks there. The financial stocks have still been weak in the banking sector. So, and if we're looking at the consolidation zone previously printed from this low back here in December 16th, we are underneath that. So it's tough to predict until we get, of course, Monday's open range to see where the high probability trades are going to be. So I tried to balance my my scanning here equally across both the longs and shorts. Today, because of the double bottom, or triple bottom rather, was a good day for stocks that were hitting those extremes. Things like Exxon, XOM. Was a great opportunity for day traders out there to go long 86. You can see that went right back up to 88, so a nice $2 pop if you're trading in the intraday kind of time frames. But to look a little bit further out in terms of some potential swing trades, one of the ones we've been talking about for a while is Rex Energy. One of the ones we highlighted in our trading room for those of you who are subscribed to our gold service. You can see that had a nice pullback right to support yesterday, down 9.33% on 4.3 million, up today 9% on 3.73 million. So you can see there's a very acute squeeze happening here. Good accumulation here on the Twigs money flow. So this could be it's a very speculative play, of course, because of the low pricing of the stock, but lots of volume. So obviously enough liquidity to be able to either day trade and certainly be able to kind of execute some of your ins and outs with a fair degree of precision. So Rex, of course, is one of those that we're looking at on the long side. One we've already picked out as one of our buy alerts a couple of days ago. The other one, which is also one from one of our previous executive summaries, which is something I'm holding long right now, is Sprint. Sprint is another one of those squeeze plays, and you can see it's been moving nicely up the chart. Still trying to get through its 50-day moving average. Had a good pop yesterday, pulled back to support, kind of still consolidating in that range. Again, another one of those kind of high speculation plays, but another pop target as well on Sprint. And I'm looking at this intraday. I'm looking at this as just a pop up to the 445 mark as a day trade, which is where I've got my current sell target. But as a swing trade, you can see that if we drive up to that resistance, 464 gives a 10% return from where we're currently at. If it drives up tomorrow into those levels. Okay, now on the short side, we have 2 stocks that I'd like to highlight. The first of which is Twitter. Now these guys, they're not reporting till next month. I think it's February 10th or something close to that. So we'll just be aware of that in terms of equity holdings into earnings announcements. But Twitter is broken down today. You can see that it was in a kind of bearish, well, I should say a bullish channel. And as we've talked about many times before, bullish channels generally break to the downside, bearish channels to the upside. And again, you can see that rule of 3. 1, 2, 3, break. Okay, and we've got a potential bearish move then here on Twitter. If we look even just to the downward side of this support zone, we're looking at a drop from 36.68 down to 35. So there's about a 5% potential drop here, which could be building on Twitter. So this is kind of where I would be looking at my targets, is that support level here, playing off the resistance. Now, one thing to be aware of course, is when you have a rising resistance line, is that these stocks can sometimes hug those resistance lines as they move across. So that's one of the reasons why I generally, it's not one of my favourite patterns, but there's certainly a half-decent setup, it appears, on Twitter here. Now, the other one that I came across, which spiked my interest, was VAL, V-A-L. And VAL, they're in the specialty chemicals sector, or XLB, if you're going to look up the sector spider. And Valspar has a head and shoulders pattern. Now, with Valspar, generally what you want to see in an ideal head and shoulders pattern is you want to see a declining neckline. So this is not the perfect formation. If you're trading head and shoulders, generally you want these lines to be pointing down in a parallel fashion versus up. But nevertheless, head and shoulders is one of the top 10 most effective strategies, or most effective patterns in the technical world. And you can see we've got a very bearish close today, down on 1 million shares as opposed to 565,000 shares yesterday. So the volume is picking up, and you can see that right shoulder has formed, the left shoulder had formed, and if we look at the distance between the neck and head, this would indicate a potential drop here from 84 down to the bottom here at 78.59. Now, just to get an idea of perspective, we can go back a little bit and have a look at where that correlates with, and you'll see that that's actually the exact same support that was previously printed here back in October. So the pieces of the puzzle do fit together here on VAL, and you can see this sharp decline in the money flow just over these last couple of days, indicating that urgency to sell that I talked of earlier. So assuming that we break through this neckline, that will also be something I'm going to be looking at as a shorting opportunity around 83.13, down to fill towards this lower end of that extension down to 79.44. So these are the two long and two short candidates that we found throughout our scanning tonight. So I certainly hope it helps. But remember, we are heading into a key day on Monday, so ensure that you've got some tight risk management strategies around your existing portfolio positions. Make sure that you're watching what's going on, and watch for where we go on Monday, and therefore, of course, where we close on Tuesday, to indicate the high probability zone for the next few weeks. Okay. That's Johnny from Acorn Wealth, your executive summary. I hope it helps. Take care.